Okay, hello everybody, and welcome back to another video from the Investor Diary. Last week, what we talked about was the importance of creating or developing a trading philosophy. And the three areas that I said I'm working on are the working environment, my working environment, and I talked about how I set up my working place, the screens, the monitors, even the way I played with the TradingView canvas. The second one was understanding price, cause, and effect. And the third element of this philosophy is understanding the traded asset. I have thought about uh, the last two, of course. I have given them, I was thinking about them a lot during the last week, and changes happened in the way I'm thinking about them, especially after hearing the video one more time. And in this video, I'm going to concentrate on the second one, which is understanding cause and effect. Last week's video came out as if it was saying price causes, to understand price causes and trade according to price causes, it is better than trading using price effects. And I said that the indicators are price effects and they are only a repackage of the price, while the price elements on the charts, such as the elements of the market structure and smart money concepts, things like liquidity and order blocks and order flows, are probable causes for price movement. And the video, when I listened to it again, I felt that it came out as if it is saying price causes are better than price effects. Now, and I made an assumption, a thesis, let's say, that this argument is correct. This is better than that. And I studied that argument in my mind, and I realized that argument is not totally accurate. Why? Basically, because one, I come from a business background. So I was a corporate person. So when we want to understand a business, what we look at are indicators. So indicators, we look, for example, I'm only going to give examples. If we look at financial statements, we will be looking at things like net profit and gross profit, sales in units, sales in dollars. And we will look at things like that are affected by what is happening in the company. So when I look at net profit does not affect, it is not the effect, it is representing what is happening in the company. So the company, what it does, it studies those indicators that it did itself, okay, and they go ahead and make other decisions. So, yeah, philosophically, we might say that net profit and gross profit affect the company, but they don't. They are a reflection, because when we do decisions, when we make decisions based on those numbers, and we want to see if our decisions were correct, we go back to see the effect on those numbers, or our activities, how they affected our decisions, and then our implementation of those decisions, how they affected those indicators. So the indicators are the effect, and they are extremely important. So the conclusion is there is nothing called better or worse than, okay? Everything has its use, and understanding different parts of the formula, it's understanding a piece of the puzzle of a chart in this case. So I wanted to go a step further in understanding the concept of cause and effect. What I'm going to do, actually, I started doing last week, which is I designed a playbook based only on indicators, namely the daily stochastic, the 4 hour RSI, and the 4 hour another indicator I got it, which is someone designed it. It's called moving average converging. Okay, so I look at these three indicators. Yes, I have the weekly stochastic and the daily RSI and the 4 hour stochastic in my view, but I'm not making decisions on based on them. I'm just looking at them, or I will try to look at them to see if they give me other pieces of information, but not in this playbook. What I want to do is like any scientific procedure, which is taking one variable at a time and to see its effect on trading. So now I'm going to use only indicators to see, and a playbook based only on indicators, and to see how it is doing. And I started last week with 3 pairs. What my intention is to go across all the 28 pairs, measures and crosses, and do this exactly the same experiment, and then come up with a total performance. Later on, I will move this environment from a playback, a replay, or a back test, whatever you want to call it. The testing period is between December 30th, 24, until December 25, which is the current days now. Namely until the 25th of December 25. So what I did, I'll show you in this Google sheet. Uh, as you can see, I did those three. Here I'm using this as a drop down for this, but then I use it also as a report to tell me the performance of each test on each pair. So for example, the one I started with is the GBP USD, and the assumed starting capital is $1,000. The GBP USD did 72, which is 7% per annum on that year. And the Euro USD, it did 6.2%. That is about 62 dollars on the 1000. And the USD JPY did negative 1.7. Okay, the performance, the total performance is 11.7%. So a capital of 1000 became 1117 after 12 months, after 1 year of the experiments. I don't have the number of trades per uh, per pair. Okay, but I have the total amount of trades that generated this. It's 67. Why 67? Because the first row is taken by the titles, and then later on in row 2 we start with the trades, and we end up in 68. That means the number of trades, the total trades for all the pairs, for all the 3 pairs, are 67 trades. I still don't have the win-loss ratio, but it is, when I was reading the trading view reports on all the 3 of them, it was somewhere between 45 and 50, sorry, between 40 and 55. The number is between those between this range 40 to 55. I think 55 was the Euro USD, and by the way, the Euro USD was doing much better than the GBP USD until the last quarter. And in the last quarter we started seeing many Euro USD losses, which created which it made it go even below the GBP USD. But before that, it was doing, I think it reached, if I remember correctly, it reached about 10% at a certain point, but then it went down. So this is the experiment that I want to do, and why I want other elements later on. And I was saying, let me finish what I started saying instead of jumping to another point. The first phase, I'm back testing all these 28. Then I will move them to a demo environment. So I will be using the exact same playbook, and I will do it on a demo account. On that same at the same phase of the demo, I will move to backtest and include elements to see if elements on the chart are going to make things better, which is adding another piece to the puzzle, understanding another piece of the puzzle. For example, if, like in this case, the price has moved here in the playbook, when the blue crosses the orange, or when the K crosses the D, downward above the 82 level, sorry, the 80 level of the stochastic, it's a sell. It's a sell trigger, and at the same time, this needs to be in the red, and the RSI needs to be below 50 and below its average. All those need to happen so as to take a short trade. Now, I want to see, for example, here, okay, here on the decisional order, this decisional order block, when we were here, we saw, let me zoom in. When we reached here, we saw a reaction. We did not see a reaction. Well, the reaction on the resistance was here, but the reaction on the decisional was here. So this is why at that point I took a sell here. I took, and it didn't work. Let's see where it was, and it was right here. So this was telling us, yes, sell, but then it stayed up. And let's see, all the time that it was up, what happened? Or the stochastic was all the time here giving selling triggers, okay, and even at this point it went to this level, while look at what the price was doing. So the stochastic alone, or the indicators alone, cannot tell the whole story. But there is another story in the weekly stochastic, to tell you the truth, and this is something for later. And this is why I have them on, but they are not within the playbook. Okay, and keeping adding conditions to a playbook, one might end up with no trades. I mean, there is no trade that will apply all the conditions. Okay, if we keep adding a condition, the trade has to has this and that and that, then we might end up with a rule that will not apply anywhere, and no trade will happen. So if we look at this movement here, look at from this point here till that point, which is, this is from here to here, okay, this is the up on the stochastic from here to, and then it started going down. But all this area of it trying to go down, it was moving up in a very beautiful classical way. This is an uptrend. I mean, if one wants to draw an uptrend in a pen, this is what they do. And I mean, this is it. Let's see. Let's look at it as a line. Look at this line. This is a classical uptrend line, while the stochastic here is telling us wait for a sell. Wait for a sell. It's just telling us wait. I am sell at this point. Sell at this point, and all of them are losing sells. And I tried them even here, because I said at this point it was a reaction on the decisional order block. It wasn't. So here it is within the order block, and it's going now to make the reaction, and it wasn't. But maybe, let's get back to the candles. But maybe the answer is in the weekly stochastic. And this is something that I need to study further. When I do the next tests on the other pairs, I will see the effect of those moves and what is the weekly stochastic role in those moves. Okay, if we go to the weekly time frame, we see a beautiful run by the stochastic and the move. It is absolutely amazing. This is beautiful. But again, look at this time. All this time, the weekly stochastic again is telling us, but this is on a weekly basis. All this time, look at this cross here. This is telling us, yes, go ahead and sell. Okay, it's going up until it started moving kind of sideways, not really downward. But look at the weekly stochastic. So even the weekly stochastic is not telling a story on the weekly, but it is telling a story. Look at this portion here. This is the portion that we were looking on the daily. Okay, this is the portion, and this portion, if we look at it on the daily, it is a downward trend. I mean, we're talking about this portion here. Okay, or maybe from here, I'm not sure. Okay, so this is my third trial. Look, at the time is 16 minutes. The maximum that I can do is 20 minutes. And one of those trials, I kept talking until 20 came and closed the window. I can't. So I had to repeat the whole thing again. So this is what I wanted to say. What I want to say is now, to be able to develop my trading philosophy, I need to understand the elements of my philosophy. I worked the first one, which was the easy one, the work environment. I cannot say it's 100%. I can say it is around the 80% for now, and for this phase I am more than 90% happy with it at this phase. Does it need improvement? Yes, later on, but with more resources and with better things happening in the other areas like trading and the other stuff that I'm working on and testing. The elements that I want to understand is, one, the cause and effect, and this is what I'm testing. Also, I am revisiting the concept of understanding the traded assets. Now, I made in the last video, I made a comparison between investing and trading. And in investing, I said we need to understand the asset that we are investing in, and why don't we do that with a trading asset. And I'm revisiting this thought. So I don't want to go deep into that because the 20 minutes is approaching, and we don't want to get there. So thank you very much, and I'll see you hopefully next week with a different. And next week will be the new year. We will be within a new year. So Merry Christmas to everybody who's celebrating, and Happy New Year, because I will only see you after the event. So I'll see you next week, and have nice holidays. Okay, bye bye.